This is the rise of the debt ceiling, and you can see with these steps how it's gone up and up and up and been suspended. But what I really want to point out to you is that the currency, this crap, is based upon the full faith and credit of the government. So as long as you trust the government and credit, you will continue to loan them money. It truly is that simple. And what we've been talking about over the years and watching occur is erosion in that confidence. Once the public loses confidence, that's when we will really see the hyperinflation.
Lynette Zang, the chief market analyst at ITM Trading, a U.S.-based full-service physical gold and silver dealer, says there are so many issues threatening the health of the United States economy in 2023 and beyond. According to the renowned analyst and veteran stacker, several entities, at home and abroad, have continued to lose confidence in the U.S. Federal Reserve and its policies over the past 2 decades. For example, other central banks have been rapidly diversifying away from the dollar and filling their reserves with gold. Between 2000 and 2009, central banks were net sellers of gold, shedding over 4,400 metric tons of the precious metals. All that changed when they saw the Fed's handling of the great financial crisis, and gold demand by the world's apex banks started a V-shaped recovery. According to Lynette, this is the exact period that the Federal Reserve broke the U.S. economy, and everything that has been done since then is just to buy a little more time before everything finally falls apart. During a recent broadcast, the renowned analyst discusses the health of the U.S. economy and the several issues that threaten it. She begins by speaking about the recent debt ceiling agreement, which she considers a terrible thing for the already ailing economy. Lynette explains that the way the entire issue was handled, the last-minute agreement and postponing the debate for several more months, send more serious red flag warnings to investors. She also talks about the Fiscal Responsibility Act, undoubtedly a sham to fool Americans, because U.S. politicians, regardless of political ideologies, have never been known to be fiscally responsible. With the debt ceiling debate now suspended, Lynette believes yet another crisis is pending for the United States. She explains the Treasury Department will now be charged with sucking more liquidity out of the markets by unleashing a tsunami of new bonds to replace its lost savings. Unpalatable news any time, but certainly a worrisome issue, when the Fed is also sucking liquidity with its quantitative tightening, and money managers are hoarding cash in anticipation of a recession. Earlier in the week, J.P. Morgan Chase issued a report estimating that the sales, set to begin on Monday with several Treasury bill auctions that total more than $170 billion, will negatively impact every asset class as they claim an already shrinking money supply. The financial behemoth estimates that the sales will create a $1.1 trillion liquidity vacuum for Wall Street. With everything piling up, Lynette says it's time to follow the moves of central banks and other big money investors by loading up on gold and silver. She believes that's the only way to safely see yourself through the other side. We will now bring you clips from Lynette Zang. Please watch, share, and like this video, and consider subscribing to the channel for more insightful clips from Lynette and other popular precious metals analysts and investors. Also, ensure you drop your comments and observations in the comments section as it helps the video reach more viewers. Thanks, and enjoy the video.
I wanted to also show you this, because we have a few countries like China and Poland that added to their gold for protection against what we're dealing with on a global basis. And then you had gold for Turkey doing what it's supposed to be doing, because physical gold is a savings account. And when the world doesn't trust your currency, they do trust physical gold. So Turkey, who is in hyperinflation and struggling, has used some of their gold to continue to pay their bills so that they can function in the global markets. It isn't that you just buy gold and that's it and you just hold it forever. Yes, you should always have a foundation in real money, physical gold and silver in your possession. Absolutely, you should always have that. But depending upon what's going on would determine the amount. Now, we've seen in Zimbabwe, and I'll talk more about this next week, and we've been talking about Zimbabwe recently, and their stock market is exploding because the people are trying to hold on to any purchasing power that they can, and so they're rushing to the stock market. This is very typical. We saw it in Argentina. We've seen it in Turkey. We've seen it in a number of places. Here's the problem with that, though. The value of that stock market is in the currency that's going to zero value, purchasing power value. Last time I checked, 1 trillion times zero was still zero. But when they do those overnight revaluations of the currency to regain the public confidence, they do it with physical gold. So gold is a bargain. So is silver, severely undervalued, because we know that a rise in gold price is an indication of a failing currency. And once you truly get that this currency is failing, then what happens? People rush to the true traditional flight to safety, which is physical gold in your possession, which becomes invisible, runs no geopolitical risk. Gold held at home runs no geopolitical risk, will protect you from the inflation. Because when all these new bonds come out, and it's going to be really easy to see, and what they're issuing right now are bills, and that's a bill, a bond. Okay, it goes like this. A bill is the shortest term, a note is the intermediate term, and a bond is the longest term. So the Treasury are issuing bills, very short term. Those will have to be rolled over. Who's going to buy them? The banks? Retirement funds? I mean, at the end of the day, people are putting money in their 401k, in their IRAs, etc. And those are typically the people that institutions are buying these things for. But what do you think that does to interest rates? And as a reminder, interest rates, principal value. When interest rates go up, the principal value goes down. If we are indeed flooded, because we have now had an inverted yield curve for quite some time and at quite an extensive level, right? When yields go up, principal value goes down. You can see that the longer the bond, the greater that fluctuation. But with this massive issuance, $1 trillion plus, whatever it's going to be, we're going to watch it. How is that going to impact interest rates? So the Fed is between a rock and a hard place, has been for a while. That's not going to change. But what will the next crisis be? I don't know. We're going to find out.
Whatever the crisis will be, the foundations for it have probably been laid already as we speak. During the broadcast, Lynette does a quick examination of this chart showing the total public debt of the United States supplied by the Treasury Department's Bureau of Fiscal Service. The shaded areas show recession, and we can see how the nation's debt really takes off after every recession. With the impending recession and the suspension of the debt ceiling debate, we can expect another $1 trillion or two added to the nation's debt before January 2025. In fact, famous economist Peter Schiff predicts that the United States national debt might increase by $4 trillion before the next agreement in 2025. This means a further increase in the country's debt to GDP ratio, which, according to experts, is already very close to disaster levels. Let's get back to Lynette's broadcast as she discusses one sure method of wealth preservation amidst all the turmoil.
Don't wait for the next crisis to go, oh God, I should have done it. Am I too late? Do it while there's still time. If we can get just 3% of the population to see what's going on, then we can make a difference and have choices. So remember, physical metals, this is your wealth shield. And this will enable you, along with all those other things, food, water, etc., to sustain your standard of living, and this will put you in a position to grow your wealth base and be in a better position on the other side of it. That's what history tells me. Could I be wrong? Well, yeah. I mean, these are things that are not within my control. But if I've seen something that's happened over 4,800 times, 100% of the time, and the patterns are right there, they're right staring us in the face, and we're going from crisis to crisis to crisis to crisis, we're already in reset mode, and I hope you're ready.
Last week, credit agency Fitch Ratings said the United States AAA credit rating will remain on negative watch, despite the debt ceiling deal. The agency said it would maintain the rating as it considers the full implications of the recent episode which took the U.S. economy right on the edge of a disastrous default. It would also consider the outlook for medium-term fiscal and debt trajectories. According to Lynette, this is yet another proof that the public, the last entity that still has some confidence in the United States government, is about to lose that confidence. When that happens, everything quickly unravels. What are your thoughts on Lynette Zang's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.